Hello everyone, welcome back to Rise Finance. When it comes to dividend ETF investing, I always rely upon my low-cost ETFs, which are SCHD, DJRO, VYM, VIG, HDV, and SPYD. SCHD is the most popular among these. It is a very low expense ETF, and the amount of filters it uses to filter out the stocks that it owns is amazing. And I consider it among one of those core portfolio holdings. In today's video, I would like to discuss more about an ETF named LEAD, which is very much an unknown ETF. But the more I dug deeper into what this ETF has and how it is constructed, I liked what I saw and felt it could be a good alternative to many other well-known dividend ETFs out there. So let's dig in. If you are new here, consider subscribing and hitting that bell so that you don't miss a single video packed with valuable information just like this one. The full name of lead ETF is Siren Divcon Leaders Dividend ETF. This ETF seeks long-term capital appreciation by tracking the performance of the Siren Divcon Leaders Dividend Index. It invests in only the anticipated dividend growth leaders, the large cap companies with the highest probability of increasing their dividend in the next 12 months. To understand more about what this DIVCON index is and how it is made up, we have a research paper. Here at the beginning, they mentioned how dividends have long played a big role in various investment strategies and how their index, the DIVCON, is a system for forecasting the next 12 months dividend action for each dividend paying company among the 500 largest US companies as measured by market capitalization. Their methodology analyzes each company based on 7 factors that focus on the company's fundamentals and financial estimates to forecast each company's likelihood to increase or decrease its dividend. A weighted average of these factors is used to calculate a DIVCON score from 0 to 100, which indicates its overall dividend health. And then each company is assigned a DIVCON rating from 1 to 5, which provides a clear and concise snapshot of each company's likelihood to increase or cut its dividend in the next 12 months. DIVCON rating 5 stocks are considered most likely to raise their dividends, and the DIVCON 1 stocks are most likely to cut their dividends. So basically, DIVCON is nothing but dividend confidence. So how confident can we be on a company that it will surely raise its dividends in the next 12 months or not? To construct the underlying index, the company has to be one of the 500 largest companies by market cap and also have a DIVCON rating of 5. And after this, a minimum of 30 stocks are selected in the portfolio, including all of the DIVCON 5 rated stocks. And if at all a situation comes up where 30 stocks are not available to make the portfolio, then those will be selected from the DIVCON 4 rated companies until the stocks reach a minimum constituents of 30. Here in their own research, what they show is 235 companies in DIVCON 5 category, which is the highest one. Almost 97% of them have increased their dividends and none of them have decreased, while 2.6% had no change. Whereas DIVCON 1, which has the lowest rating, in that 170 companies, only 24% of them had increased their dividend, whereas almost 40% of them had reduced and 37% of them had no change. This ETF is currently owned by SRN Advisors, which they bought it in early 2020. And before that, they were owned by another company called Realty Shares. When we see in that company's website, we can see that till they were acquired, they were maintaining a good data showing how much each company was having a DIVCON rating. Here, when you select only the DIVCON 5 level stocks, which are the stocks with the highest rating, you can see these companies mostly have a rating of 5. When you go to DIVCON 4, we can see the ratings reduce. Likewise, as we go down the ladder in DIVCON 3, the quality of dividends also gets reduced. Likewise, in DIVCON level 2 and DIVCON level 1. So this is a nice way of rating your companies so that you choose the best among them. When you look at the basic facts of this ETF, it started on Jan 6th of 2016. So it has more than 6 years of history now. The history is decent enough, so we can see how it behaved in the pandemic drop, also the recent volatility. The top 10 holdings include cash being the first one, which is actually not surprising given the recent volatility. Many fund managers are actually having cash on hand so that they can deploy them whenever they see good opportunity. After that, we have Nucor Corp, L3 Harris, Mastercard, McKesson, Nordson, EOG Resources, Sherwin-Williams, Hershey, and Apple. So that's a nice blend of both growth and value over there. When you look at the remaining holdings after the top 10, we see Visa, Broadcom, Texas Instruments, Aflac, Tractor Supply, Brown and Brown, West Pharma, HP Inc., Hunts JB, and so on. So overall, it has 66 holdings, which is good because it's not as passive as your VYM or VIG, which just consider a dividend increase in the last 10 years or the last 5 years. There is a lot of thought that is going into your stock picking. Morningstar gives this ETF a 5-star rating, while ETF.com considers this ETF in its top 20%. I was actually surprised to see this ETF getting such good rankings and ratings and still being such an unknown ETF. It has a relatively higher expense ratio of 0.43%, which may justify the effort the ETF is putting into big quality stocks. Given it's a pretty much unknown ETF, it even has a lower assets under management of just about $57 million. It has a yield of 1.95%, which is on par with what we get for DGRO and more than VIG. To check for the portfolio composition, we come to Fidelity. We can see the sectors, information technology being the highest at almost 29%. Then financials and consumer discretionary are almost 15% each. Then industrials at 14 and healthcare just over 10%. Almost 57% of the portfolio is into large cap and 43% is in mid cap. When we compare the performance of lead ETF against an S&P 500 index fund like VOO or against SCHD, the most popular dividend ETF around, we can see in the last 1 year it has outperformed SCHD and has slightly underperformed the VOO. And in the last 5 years, we can see it outperforming both VOO and SCHD. And even if we add the famous dividend ETF like VIG into the mix, it has lesser performance on a 1 year and a 5 year basis. Let us now backtest how the lead ETF performs against a few other famous ETFs. Here we consider the portfolio visualizer as our website to test it out. The start year here we give as 2016 because that's when the ETF started. Initially contributing $1,000 and contributing $100 from then on every single month, reinvesting the dividends. And here, for the first round of test, I have considered lead against SCHD and DGRO as other portfolios. When we click on Analyze, we can see the results for the last 5 years from Jan 2017 onwards. And for the portfolio returns, when you look at them, the lead ETF edges out both SCHD and DGRO. Let's say we replace SCHD and DGRO with the VIG and VYM, VIG and VYM and analyze portfolio, we can see the lead beating out VIG by almost $800 and VYM by almost $1,500. And in the third round, let's replace VIG with the HDV and VYM with the SPYD, HDV and SPYD, and analyze. The portfolio for lead ETF is almost $2,300 more than HDV and $2,000 more than SPYD. In the last round, let's compare lead with the Noble, which is the Dividend Aristocrats ETF, and DHS, which is from Wisdom Tree. So both Noble and DHS have an expense ratio similar to lead. And we compare the portfolios. Again, we can see here the lead ETF beats out both the Noble by more than $1,000 and DHS by more than $2,000. Seeking Alpha gives it an A grade for the yield, and here we can see it as a forward yield of almost 5.5% with a 5 year growth rate of just over 34%. From a dividend growth perspective, it shows it increasing the dividends for just 1 year. But when we go to the dividend growth tab, here we can see it started in 2017 at 31 cents per share. Then it was 41, then 51. Then we see a dip in 2020 to 38 cents. And after that, again, they increased it to $1.08. That is a massive hike. So just this 1 year dip in 2020 is what brings that particular value to just 1 year of dividend increases. Otherwise, it has been pretty much good in increasing its dividends each year since inception. Overall, the Siren Divcon Leaders Dividend ETF is a good ETF considering it has a good logic to select the stocks in its portfolio. The appreciation is on par with your S&P 500 index and more than any other dividend ETF commonly referred to. So one should surely have this ETF in their watch list. I surely will be looking at it in the future and will consider it whenever I am comparing any ETF performance. Hope you like this video, and I would really appreciate if you could hit that like and subscribe buttons so that YouTube can suggest this video to many more people out there. And also, it would be great if you could provide your comments on what would you like to see in the future videos. I'll try my best to cover them. So until we meet in the next video, let's try as much as we can to be financially healthy. See ya. Bye.